Okay, so this is a third video for chapter 5, compensation. So we've had a bit about planning and setting compensation. Again, better to start low and then move up bit by bit over time as you see more cash revenue for your church. Okay, and then with regards to expenses, again, compensation would be the largest portion. I think around up to 50% maybe. But that's again only for small churches that are beginning to operate. But for established churches, it might go down to, let's say, 10 to 20% as they try to put more of their funds into the programs. Okay, let's say supporting missions, their building funds, and then of course they do have their regular programs like the what do you call it, Sunday school, of course, other things, right? And then with regards to planning and setting compensation, you should also consider sustainability, because once you've set that amount of money for compensation, again, it's kind of difficult to adjust it lower. Okay, so it's kind of difficult to ask someone if you can lower their compensation, if you can lower their salary or honorarium that they're getting. Um, so again, as much as possible, start at the lowest amount possible, and then as you realize or as you recognize that the church can afford to give out more to your workers, then add up to that bit by bit. Okay, because you have to consider sustainability. Okay, at the beginning, if you're not very sure how much to give out, then consider the cost of living in the place where you are, because the cost of living would be different from places to places. Normally rural areas would cost less. The amount of money you have to pay for rent, to buy meals, to buy supplies from the market, it's considerably cheaper compared to living in a city. Okay, in the city the prices are too high, the rent is also high, it's quite expensive, so have to consider the place where you are operating your church. Okay, and then the amount of money that your church workers would need to live simply or comfortably in that situation or in that place. Okay, and then the other one, again, conservative. You don't want to find yourself again, budgeting. In chapter 1 we discussed that a church normally prepares an annual budget. Okay, January to December. You don't want to find yourself at the end of December, or maybe October, November, December, you begin to realize that, oh, we don't have money anymore. Okay, because we have been paying, we were unable to, what do you call it, properly project how much money we're going to be receiving. Okay, so for example, you projected to receive 50,000 a month. Okay, but then the expenses of the church per month is around 60,000. Okay, so you are only receiving 50, but your total expenses is around 60. So where would you get the money? Okay, so every month you have a deficit of 10,000. Okay, so of course, to have that scenario, you're probably cutting down on certain expenses. You're probably cutting down expenses to use for the programs, for the supplies, maybe for it's also possible that you're cutting down on your own salary just to make it work, make sure the 50,000 is enough for all the necessary expenses. Okay, so again, you don't want that scenario to happen. As much as possible, if there's only 50,000 coming in, then that's the only amount of money that you can spend. okay, 50,000 as well. Okay, so if if just, you know, on the rare event that it happens that you have to easily adjust. This is also the reason why it's important to properly monitor the financial condition of the church. You don't want to only look at the financials at the beginning and at the end of the year. Every month, you have to regularly check the cash flow, especially the cash flow of the church. Okay, have to make sure that the company, the amount of money that you are spending is within the amount of money that you are receiving from the contributions. Okay, you don't want to overspend. Okay, and then I think the other principle would be communication. Again, it is very important for churches that are just starting up. It's best to properly communicate with your workers. Give them proper expectations. Okay, we're going to begin by giving you, let's say, 5,000 a month, or maybe 6 or 7,000 a month, and then when we start receiving more from the contributions, maybe we can increase this to 8,000 slowly until we reach, let's say, 10,000 a month, okay, which would allow you to live comfortably. Okay, but of course, it would be different for the workers. Some workers may have more needs than the others, so you might want to take that into account. Okay, and then the other thing that must be considered, termination. There would come a time wherein a church or an organization would have financial troubles. Okay, and whenever there are financial troubles, the organization normally would have to cut their expenses. Okay, and cost cutting for a company non-profit organization is considerably much more difficult, because again, the source of income are normally contributions. So when it goes down, normally what you can only do, you have limited courses of action to do. Okay, you can remind the congregation, the members, the guests to give more, because there are others who are unable to give. Okay, you can encourage the congregation to give more, and then cost cutting. With regards to cost cutting, because normally they support the church mission and purpose, so it's kind of difficult to cut the expenses. You know, let's say you're giving for the missions, you're supporting the regular activities, so it's kind of difficult to cost cut there. And cost cutting, let's say supplies, fare, certain allowances, it would not be the amount would not be very significant. Okay, so sometimes churches would consider laying off or terminating some employees. Again, these are only for extreme cases. For example, the 2008 financial crisis, um, during the pandemic, I guess, when we've seen a decline in contributions. It wasn't that significant, and we eventually bounced back. But we can't be sure if that's the case with other churches. Okay, it might be different. So, but in case you have to be prepared for such a scenario, and when such a thing happens, let's say you're expecting revenue of 50,000, right? But then the reality is that for a given month, it went down to 20,000 only. Okay, so that's a huge decline in your revenue, about 60%. So in that sense, you have limited courses of action. Again, encourage them to give if possible, but for the most part, normally they cannot because of their situation as well. So you can cost cut certain expenses, but it would be compensation that would take the greatest hit. So with regards to compensation, you have to consider the legal implications. Okay, you may have to offer termination benefits. Before you let them go, you have to, of course, give them some sort of uh, money to prepare them, okay, so that they could have something to use as they seek employment elsewhere. And then legal implications, um, since a church is non-profit, there's some leeway there. If normally if a company is suffering financial trouble, they're allowed to terminate, to do layoff, but again, properly compensated. The employees to be laid off needs to be properly compensated. Okay. Normally it's 2 months, 3 months worth of their salary, 2 to 3 months worth, or it could be more depending on the discretion of the church management. Okay. And then what else? Um, if you can also, help out the laid off employee to find a new job, to find another job, that would be better as well. Okay. And then another unemployment benefits. There in the book, what do you call it? Again, US based, the book that we're using. So some what was mentioned about unemployment benefits may not be the same as the unemployment benefits that we currently have. The unemployment benefits that SSS provides to Filipino workers, it was only implemented during the pandemic actually, because we've seen a large amount of people losing their jobs because of the pandemic. So SSS came up with the program of providing unemployment benefits so that they could, tide over during a difficult time. So again, you have to consider as well if your workers would be the laid off or the terminated employees, workers would be able to avail of the unemployment benefits or not. Okay? Because if they are not, then it might, fall on you to give them a little bit of support uh, to tide them over until they find a new job. Okay. And then lastly, when it comes to increases in compensation, you have to carefully consider it, because once you increase it, um, normally you're not allowed to lower it again, because that would be, what's the term? There was a term. I forgot. Okay, essentially it's not allowed. Um, what's the term again? So I can't remember. You have your promotion going up. Demotion. Okay, sorry. Demotion is the term. Demotion is not normally allowed. Okay, so if a person is already receiving 10,000 a month, and then you change his position, you change the job description, you can't give him less. Let's say, make it 8,000 a month. Okay, you have to retain it at the 10,000 or at the current rate before moving him to a different program or to a different job. Okay, but yeah, there is that. And then before you consider increasing the compensation of an individual, you have to also consider the additional cost to the company, to the organization. Okay, so how much would be needed to support this type of increase? Because again, it has to be sustainable over the long term. um, and then other than that, the mandatory benefits. The mandatory benefits, SSS, PhilHealth, and Pag-ibig, they are tiered or tired, what do you call that? Bracketed, okay? The higher the compensation, the contribution would also increase. So if you increase the compensation, you have to consider the corresponding increase in the contributions, okay? So if you're looking at increasing their compensation from 8,000 to 10,000, that's not 2,000 per month, okay? It would be more than 2,000 because of the increase in the contributions as well, okay? So it might be around, let's say, 2,000 150 per month. So have to compute it for a year, and that's the amount of money that you need to afford such an increase in compensation. Okay, so you have to be very careful with regards to increasing compensation. It needs to be sustainable over the long term. Okay, so that would be it for chapter 5 discussion. I haven't been able to go through. I did read the material, and then I did summarize it with um how we went through it. So there is that. You can still read the material though. There are some other information here that you might find interesting. Okay, I think I would discuss the others on the next chapter. The next chapter is about managing liquidity and financial position, so a bit more in depth. Okay, so that would be it for chapter 5. Thank you.